So the Japanese stock market, it's been on an absolute tear, right? Hitting record highs. But then you look at the news and it feels like every positive headline has this little asterisk next to it, a warning about currency risks or sudden policy shifts. It's kind of confusing, to be honest. So today, we're going to cut through all that noise. We're going to use a simple but really powerful framework to see what's really going on.
Yeah, I think we've all been there. You're trying to follow along, you read the articles, you see the numbers flashing, but at the end of the day, you're just left thinking, okay, so what's the bottom line here? It's this flood of information, but no real conclusion. Well, today, we're going to try and fix that.
So let's start decoding all this noise. At first glance, things look great. The market's got this real positive momentum. But if you look just a little bit closer, you can see these risks kind of bubbling up under the surface. It really creates this puzzle. Are the good times really here to stay, or is there some trouble just around the corner?
All right, to solve this puzzle, we're going to pull out a special tool. It's called the four-layer analysis. Think of it like putting on a pair of glasses with 4 different lenses. Each lens, market, policy, trade, and geopolitics, shows us a different part of the picture. And by looking through all 4, one by one, we can finally get some real clarity on what's going on.
Okay, so let's do it. Let's dive into these 4 layers and see what each one is telling us right now. We'll even give each one a score to figure out if it's a tailwind, pushing the market up, or a headwind, holding it back.
First up is the market layer. This is all about the raw pulse of the market itself. What are the prices actually doing? What are investors thinking and feeling day to day?
And the score we get for this layer is a plus 0.39. So what does that mean? Well, it tells us the market's internal engine is running on the positive side. It's what traders call risk-on sentiment. Basically, investors are feeling pretty good. They're confident and they're willing to buy. The big question is, why?
Well, for starters, the Nikkei is just soaring. And maybe even more important, volatility, which is really just a fancy word for market fear, is way, way down. That's a great sign. Now, what kicked all this off? A global AI and tech rally, sparked by NVIDIA's absolutely massive earnings. And this isn't just a few stocks lifting everything up, it's a really broad rally, which is what the pros call a good quality bull market.
All right, that's the market. Now let's switch lenses and look at our second layer, policy. This is where we get into what the government and the Bank of Japan are up to. We're talking interest rates, stimulus plans, all that good stuff. And the score here is minus 0.12. That's basically dead neutral, right? So why is that? Well, it's because this whole layer is a battlefield of opposing forces. It's a genuine tug-of-war between things that help the market and things that hurt it. So in one corner, you've got this huge 20 trillion yen stimulus plan and a weaker yen, which is great for exporters. Both of those are pulling the market up. But in the other corner, you have rising interest rates and a whole lot of official concern about that yen falling too fast. Those are pulling the market down. So what's the takeaway? For right now, policy is just about helping more than it's hurting, but man, that could change in a heartbeat.
Okay, on to layer 3, trade. And I want to be super clear here. We're not talking about imports and exports. In this analysis, trade is all about how Japan's market is performing compared to the rest of the world. Is it the star player or is it sitting on the bench?
And the answer to that question is, it's the undisputed MVP. The score here is a massive plus 1.82. I mean, look at that number. This is by far the strongest, most positive signal in our entire analysis. It's basically screaming that international investors see something really special happening in Japan right now.
And if you want to see what that looks like in practice, just look at this chart. It's not even close. Year to date, the Nikkei hasn't just beaten its global peers like the S&P 500, it's absolutely left them in the dust. We're talking more than double the returns. This is a massive, massive outperformance.
So what's behind this? Why is Japan winning so big? Well, it's a few key things coming together. You've got new government growth strategies kicking in, you've got that weak yen making Japanese exports super competitive, and you've got this big strategic idea that Japan is a safe, stable hub for the all-important semiconductor industry. The message from global money could not be clear. Japan is a winner.
Okay, last but not least, let's switch to our final lens, geopolitics. This is where we have to zoom way out and look at the big picture risks. Think global instability, currency jitters, the kind of stuff that can act as a major drag on any market.
And this is where we find our biggest negative force, a score of minus 1.24. So while the market's own engine is running pretty well, these bigger external factors are acting as a significant kind of quiet drag on everything.
So what's causing this drag? It really boils down to two things. First is global volatility, which we measure with the VIX index. You might have heard it called the fear index. It's pretty high. The second culprit is that yen. It's gone from being a helpful tailwind to being, as one analyst put it, excessively weak. See, a currency that falls too far, too fast, can create its own brand of instability. You put those two together, and you've got a serious headwind.
All right, we've looked through all 4 of our lenses. We've got a slightly bullish market, a totally neutral policy, a super strong trade layer, and a pretty bearish geopolitics layer. So now for the main event. It's time to put it all together and get our final verdict.
And here it is, all on one table. You can really see the battle playing out, can't you? You've got the very bullish force of trade and the slightly bullish market fighting against that bearish drag from geopolitics. And poor old policy is just kind of stuck in the middle, not helping or hurting much. So, who wins this fight?
Okay, drum roll please. When we combine all 4 forces, the final composite score comes out to plus 0.27. Okay, it's a positive number. But what does that actually mean for an investor? Does this mean it's time to buy?
What that number is telling us is that yes, the positive forces are winning, but just barely. It's a close fight. The experts would call this a light risk-on environment. Let's put that in plain English. It's basically a green light, but it's one of those blinking green lights. It's telling you to proceed, but with a lot of caution, because those headwinds we talked about are very, very real and you just can't ignore them.
Okay, so that's the picture right now. But what's really powerful about this analysis is that it also gives us a great way to think about what might happen next, say over the next 1 to 3 months. What are the potential paths from here?
Well, there are really 3 main paths. The main scenario, the most likely one, is that things kind of stay the course. The market hangs out in this high range, with those AI and tech stocks continuing to lead the charge. But then you have 2 big risks to watch out for. Risk number 1 is what you might call an interest rate shock. This is where the Bank of Japan makes a sudden move, and that could really hit those high-flying growth stocks hard. And risk number 2 is a US slowdown. If the US economy cools off or the AI hype starts to fade, that could trigger a much broader correction.
And that really brings us to the final critical question. You've got this incredible AI optimism acting like a powerful engine, pushing the market higher and higher. But at the same time, you've got these serious policy and currency risks acting like a strong gravity trying to pull it all back down to earth. So which one of these powerful forces is going to win? Which one will define the future? That right there is the question you need to keep asking.